I don't think that I go into public anymore without somebody asking me about interest rates.
Me neither.
Ever.
What are rates doing
What
today?
are the rates doing today? And I'm like, they're still bad.
They're terrible.
Still bad.
I can't wait for the day that, inflation has been tempered and we're back to normal.
Yeah.
Interest rates have been like a hot topic. It's just in this particular market right now, in this day and age, it's what is driving stuff. And so we want to break down some, we're talking with lenders every day, we're talking with buyers every day, sellers every day about interest rates and pricing and all sorts of stuff.
Different agents.
It is a hot topic burning at a bright white like heat right now. It's kind of like when COVID came out, everyone was like, well, what's going to happen with COVID? How's it going to affect the market? Or when the crash came, in 2008, 2009, what's happening with the market? Price reductions, foreclosures, distressed sales. Right now, it's interest rates.
Yeah.
So before we get into it, let's go ahead and make our call to action.
As always, you guys, we're needy. Hang out with us. Like, comment, subscribe, engage with us in the comments. If you're really interested in something specific, tell us. If you're not, tell us.
Yeah.
Right?
Yeah. We can take it.
Call us, email us, text me, call me, beat me. If you want to reach me.
DMs.
All of the things, you guys.
Yes. We are happy to hear from you. We are seasoned agents working in the North Idaho market. We have a lot of experience and advice and perspective about North Idaho, and we love to share that with people and help guide people along their journey.
Their journey to home buying.
To home ownership and to residence here in North Idaho.
So wherever you're at on your journey, we're here for you every step of the way.
Yes. I'm so good at this. Okay. So, yes, call Sammy.
Call me.
So getting into interest rates
let's
again.
talk about it.
One thing that we haven't quite shared yet is, obviously how interest rates are impacting the market, but for buyers, what are options? What are solutions?
Right.
So we really want to kind of break down some tools that are available to buyers, and then also the advisory role that lenders and agents play in this crazy market. So Sammy's going to kick us off.
Well, we got to get into the interest rates a little bit before we get into the solutions, but what's happening, right? Interest rates are above 7 as of today. I mean, depending on when this comes out today in our real world.
Yes.
7%. So your buying power is significantly reduced. We've seen basically a 30% loss of buying power for our buyer clients, which, is a huge loss essentially.
Yeah.
With every increase, we've seen hundreds of dollars added to your monthly payment. So when that inverse relationship with your interest rates and your house prices, we're adding a couple $100s a month to your mortgage essentially, which is maxing people out of the market.
Oh, totally.
And some buyers are finding themselves unable to purchase at the moment because that monthly payment is just unattainable with the hike.
Yes. When we see from let's say February, I think was really kind of the low point, the last low point before everything really started consistently going up. It kind of bounced around a little bit, but since February, we pulled some different numbers as we were putting this together. And there are some people who have seen, if you were looking at a particular price of a house with the rates in February compared to the same price house with the rates today, just shy of $2,000 added to the monthly payment. I think it was 18 something added to the monthly payment. And then every time rates tick up, from the last, rate quote that you got to the new one, it could be adding $200-$300 to your monthly payments.
Right.
So it's definitely, it's putting the squeeze on a lot of people.
Because,
right
you're
now.
going from basically, maybe like a $3,500 a month payment to now $5,000.
Yes.
And that's a substantial difference,
yeah.
right? So it's really just kind of like put a pretty strong freeze at the moment.
For sure. So one thing that we do know is when the market gets crazy like this, the industry that's kind of hit the hardest tends to get really creative in how they combat that. And so with interest rates, mortgage lenders have really been, at the thick of it right now in terms of their clientele, and that trickles down to us, obviously, as realtors. So one thing that has come out of this is the pivot that lenders have been doing in their industry to address and help mitigate the rising cost of interest rates. And so we've seen the creation of products that never existed before, 2-1 buy down program. So a 2-1 buy down program is essentially you get a seller credit at close, and which you negotiate through your contract, and you use that to essentially buy your rate down for a couple of years. And the idea behind this is that rates will eventually stabilize and come back down to something a little bit more reasonable and palatable, an easier pill to swallow. And so when that happens, you can refinance at that lower rate and make it permanent. But this helps offset the cost for the first 2 years. So in the year one, from your stated rate, say it's 6.5% was the rate you locked in. For year one, it's 4.5, 2% lower. For year two, it's 5.5, 1% lower. So the 2-1 buy down program. And then on year three, it pops back up to the stated interest rate, and you ride that out for the remainder of the loan, or you refinance. And that is, I think, a big key right now is the ability to refinance, so not putting everything on hold. And maybe it might be uncomfortable for a couple of years, but there's the ability to refinance and really get that rate down and make that permanent moving forward. Lenders have really gotten into the thick of things in terms of advising on credit and to improve rates, because one of the biggest things that we see is debt to income ratios, and that affects credit scores, that affects your ability to get more of a loan or a higher amount of a loan. And so advising on credit scores, if we can polish up that credit score even a little bit, pay down a little bit of debt, pop that score up, maybe this might take a couple of months, but it might also shave off, a little bit of an interest rate and buy you a little bit of savings on a monthly basis. Credits towards closing costs and prepaids. We've seen some lenders out there offering, a 1% credit towards the closing costs and prepaids, or matching a new construction, like a builder might be offering a credit. They'll match it $5,000. So now you've got a $10,000 credit to use towards your closing costs and prepaids. And what that does is it frees up cash in your pocket, because you're not doling out $10,000 out of your pocket in cash at the closing table. Someone else is covering that for you, so you get to keep that in your pocket. Either that, or maybe you use it to buy down your rates, or pay for a 2-1 buy down program. So covering the cost of appraisals is another thing we've seen lenders doing. I know there's one institution here in town, Mountain West Bank, that covers the cost of appraisals. Right now, you've got a coupon, and so that in and of itself could be a $500 to $1,000 expense, depending on the size and the location of the property. But that's one more thing to just cut the costs for you guys. And then also recommendations to increase down payments amount and find extra cash. I went to a lender panel recently, and they were talking about house hacking. Can you find roommates to help, bring in more cash flow on a monthly basis to help offset that? Can you maybe ask for a gift from a relative? And I know this doesn't work for everyone, but these are things that they're throwing out there. If you can get a gift from a relative, can that go towards buying down your rate? If you can get a gift from mom and dad, Can that go towards your down payment and your closing costs? So just really trying to find money and squeeze it out wherever you can. Maybe getting, maybe paying down debt as well, and creating extra cash flow since you're not paying that every single month. So lenders are really trying to really sharpen their skills and provide more value. So tactically, what do we do with all this information to lower the rate? So sellers, like we mentioned, the credits towards closing costs and prepaids, depending on the type of loan, sellers can credit you up to 3 to 6% of the purchase price in closing costs. So for like a $300,000 house, that would be $9,000 on the low end, and up to $18,000 on the high end. And depending on, what your closing costs are, how much money you're bringing to the table, every scenario specific to the person or the family or the entity that's purchasing. But you can use it to pay your out-of-pocket expenses. You can use it to buy down rates. You can use it to pay for your prepaids. Private mortgage insurance is another example of something you can prepay. So sellers can offer those credits. Now, your lender can't offer that credit and your realtor can't offer that credit, but the seller can. And we have seen extreme negotiation in this market where sellers definitely are saying, you know what? I need to move my house, so I'm willing to offer you a $10,000 credit that you can use towards making your situation more affordable and less painful, because that helps everyone out and it's a win-win. So we're seeing both buyers and sellers really working together. Reconsider your down payment. I've seen people they had intended to use a 20% down payment, and because we've got that number in our minds, you've got to have 20% down. And instead of using 20% down, they use 10% down, and then they use the other 10% in cash to help offset rates. Yeah. So shuffling that money, sometimes we don't need to use all of it in the way that we had intended, and we can kind of use some of it in a different manner. And also, maybe we use a little bit of cash to reduce debt, which helps us get more favorable rates as well. You can prepay, and not all scenarios is this maybe the best case or the best tool, but you can prepay your mortgage interest. So say you don't have 20% down for a loan, anything less comes with private mortgage insurance, and that covers the bank in case they have to take the home back. So you can prepay that mortgage insurance even though you're putting less than 20% down, and that knocks off a couple $100 from your monthly payment also. So there are certain scenarios where that might be advised. And then also, if cash is easily available, use some now to buy your rate down permanently, and then you can stay put, especially if you plan on staying somewhere for 5 or more years. If you don't plan on staying somewhere for 5 or more years, you might want to look into a different loan product, like an adjustable rate mortgage, a five-year ARM, for people who are in a more temporary situation. And those rates tend to be a lot lower than your conventional 30-year fixed rates. Yeah.
And also kind of like shopping around with your lenders, right? So talk to different lenders at different facilities, because everyone has different programs, right? That you might know about, and different fees, and just shop around, right? Talk to your realtor about who we like to use, right? Maybe little referrals, but don't just do like a one and done, right? It's always kind of important to see what else is out there to kind of fit your situation the best, right?
Yeah.
So shop around with your lenders. Again, kind of Lindsay was saying with the seller financing, sellers are a little bit more motivated, it seems like right now. I think just with the drastic change of the market, right? They're seeing things stay on longer, so they're almost a little nervous.
Yeah.
So sellers are definitely more motivated to assist the buyers with getting them into the house, as in turn selling it for themselves, right?
Yeah.
So the seller financing is kind of a not newer, but a little bit more
something
popular.
That's emerging a little bit more,
at the moment.
Yeah.
And then again, use your tools, use your lender, use your agent. Really in this time, it's important to embrace that like advisory role with your professionals that you're working with, because again, this is like a crazy market we've seen, different programs. So really just utilize the tools that are at your hands.
Yeah. And we know all of,
yeah.
I mean, all of these things. You might sit down and maybe one of them has crossed your mind.
Yeah.
All of these are spinning around in our minds. And so we're going to be firing them at you. What about this? What about this? What about this? What about this? And, you know, synergistically, all of these things can help really shave off and make things more affordable. Just really, really making sure that, you know, you're crossing all your T's, dotting all your I's, exhausting your options.
Because again, it's not a one size fits all scenario, right? Every transaction, every family is different. Everybody needs maybe a little difference, right? So use your professionals, ask questions, like no dumb questions, right?
No, never.
To make sure that everything is just like put in place correctly for you and for where you're at in your journey.
Exactly. So if you found this information valuable, make sure to like the video. Don't forget to subscribe. We've got new ones coming out every single week. We always appreciate you guys following along and viewing our content, engaging with us. And we're always here to chat about this stuff and, you know, any of your plans, call, text, email. We love to hear from you guys. That's what we're here for. So thank you for joining us this time, and we'll see you next week.
Bye.